Now for our feature story of the day. Russia's largest bank, Sber, offers up Bitcoin-linked bonds. This is big news, yo. So let's share the significance of this. Also, your high priest, Max Keiser, wrote, what if Russia suddenly realized they have a very high strategic advantage and could buy 1 million Bitcoin faster than the US and win the global hash war? Incredibly cheap energy costs, number one. Number two, extremely low debt of 14.9% to the GDP. And number three, the ability to print their own currency. Issuing $100 billion in BitBonds is easy for Russia. Buy 1 to 5 million Bitcoin, no problemo. Your high priest has spoken. Shout out Max Keiser. Now, check this out. Max also reposted this post, and it's very powerful. Russia just state-sanctioned a parallel capital architecture. Sberbank's structured bond isn't a marketing gimmick. It is a test deployment of sovereign-compatible Bitcoin integration within Russia's legal perimeter under its currency and without violating capital controls. This is the first real example of a nation-state formally embedding Bitcoin into its domestic bond issuance structure, using it as a performance anchor without needing to custody or declare reserves. And here's why and what this really reveals. Number one, Russia is operationalizing Bitcoin as an escape hatch, not by holding it, but by tying the future value to it. They're not stacking the biddy. They're pricing their debt against the preload biddy going up forever, Laura. And number two, Bitcoin is becoming a sovereign benchmark. Preach. This is exactly what gold used to be. A hedge against fiat. I call it retardation, inflation, geopolitical collapse. Now Bitcoin is becoming that without needing the global consensus, just exposure. And number three, it mirrors what the U.S. is doing strategically, but silently. The U.S. strategic Bitcoin reserve is real. Trump is friendly to Bitcoin and the dollar system is creaking. So what we're seeing is two nuclear powers racing to co-opt Bitcoin without admitting they need it. The contrast with China is now stark. Number one, China bans Bitcoin outright again. And two, Russia builds Bitcoin-structured sovereign instruments. That divergence is not temporary, it's ideological. China wants full surveillance, the digital UN. Russia wants parallel capital options for the sovereign defense. Bitcoin sits at the intersection and is now being weaponized as a neutral hedge by both friend and foe of the West. What this means for the global system, number one, we're in the early sovereign derivative phase of Bitcoin monetary integration. Number two, reserve grade status is no longer theoretical, it's being tested in the debt markets. And number three, the illusion that Bitcoin is retail speculation is now permanently broken. That's right, all your models are broken, I dare say. This is the birth of Bitcoin's role in the post-SWIFT monetary architecture. Take that, legacy payment rails. And now for the final truth. Russia just fired the first monetary shot, bang, bang, in the realignment war by not buying Bitcoin, but by pricing its sovereign future alongside it. This is no longer about the pre-little bitty price. This is about the pre-little bitty as a structure. And the deepest truth, you ready for this? The sovereigns who integrate first will survive the collapse of belief. The ones who ban it will watch their systems fracture when the real shock hits. Can I get a mic drop? And massive shout out to site bringer The Prophet for this post. Right on the money, hence why you got reposted by your high priest, Max Keiser. Now let's dive a little deeper into the particular here. Russia's largest commercial bank, Sber, which rhymes with money printer go Burr, has launched the Bitcoin-linked bond product tracking crypto changes in price to the dollar-ruble exchange rate. That's right. The product is already available to the qualified investors in the over-the-counter market. The Sber plans to list the product on the Moscow Stock Exchange in the future. The company formerly known as Sberbank said in their statement, the listing will ensure transparency, liquidity, and convenience for the wide range of qualified investors. Sber said the structural bond could allow holders to earn income from the change in the dollar value of the biddy and the strengthening of the dollar against the Russian ruble. Well, that's right, Famalam. The bank said that all the transactions are carried out in rubles with Russia's regulatory framework, so investors don't need to rely on crypto wallets or unregulated platforms. Sber said it would also offer exchange-traded products, ETFs, providing a exposure to crypto on the Sber investment platform, starting with a Bitcoin futures product, which the bank said would be listed June 4th, which is tomorrow. Once the Moscow exchange officially launches the product, Sber's move comes as Russia's central bank permitted financial institutions to offer certain crypto financial instruments to accredited investors May 28th. However, a key stipulation of the Bank of Russia's announcement was the financial institution could not offer cryptos directly, so indirectly, so be it. The Moscow bank T-Bank, formerly the Tinkoff Bank, interesting name, rolled out the investment product tied to the Bitty price on the same day, referring to the product as a smart asset that is issued through the Russian state-backed tokenization platform Atomize. The central bank reported that the Russian residents hold around 827 billion rubles, which is 9.2 billion USD worth of the crypto on centralized exchanges. In its review of the first quarter of this year, inflows into the Russian crypto platforms also rose 51% to 7.3 trillion rubles, which is 81.5 billion USD over the same time frame. And Bitcoin holds a 62% share on Russian crypto exchanges, followed by Ether at 22% and stables like Tether and USDC. And if you don't know, now you know. Let me know your thoughts on that. We're going to transition, end the YouTube stream, and continue with the uncensored version of the pod on X and Rumble. So if you're on YouTube, you ain't got to go home, but you need to get the fuck out of here.